China's imports surged in April, exceeding expectations as purchases from the US, European Union and Russia grew last month. Worldwide, imports climbed by 8.4% year-on-year. Expectations, though, were only for 4.8%, so a real surge. Exports rose by 1.5% year-on-year in April. That's in US dollar terms, and that was completely in line with expectations. But it's interesting to note that China's imports from the US climbed 9% in April from a year ago, while exports dropped by nearly 3%. Despite all that, the US remains China's largest trading partner on a single-country basis. China's exports of cars, LCD panel displays and home appliances rose, while exports of cell phones fell slightly. Exports of ships also dropped. And now let's get more on this with Tim Waterer, a KCM Trade Chief Market Analyst. Thank you for being with us this morning. So,
My pleasure.
What is this signaling in terms of the Chinese economy? First of all, exports rose in line with estimates, but imports literally surged.
Good to be with you, Ludovica. Yes, some really positive numbers today. Quite surprising, actually, particularly on that import front, as you alluded to. That has been a particularly soft sector for the Chinese economy in this post-COVID reopening era. It's really been lackluster domestic demand, which has really been hindering the economy. So to see those import numbers nearly almost double what was expected does bode well looking ahead to perhaps the Chinese economy starting to turn the corner. We have seen some investment banks starting to become more positive on Chinese investment, so that'll help their cause looking ahead. So maybe it's a bit too early to say if it's, this is the critical turning point yet, but certainly some green shoots there if they can get that domestic, confidence rising again, leading to increased domestic demand. That would bode well for fighting the deflationary pressures which are still present. So yes, positive signs there, but still a little bit tentative. We'd like to see some further evidence in coming months that this is the start of a trend, not just a one-off positive number on the imports front.
That's true. That's a positive number for China specifically, not only. And I do want to ask you, China's imports of crude oil and natural gas rose, and so did steel, plastics, medicines, and of course, automatic data processing machines and parts. What sort of impact is that going to have on those prices, on oil and gas prices, on medicines prices? We know China is very, very important when it comes to imports, given the size of the population of the country. What do you think?
Yeah, absolutely. There'll be a lot of financial markets looking at these numbers very closely. Energy markets in particular are very sensitive to what's happening in the Chinese economy. So I think, those rising Chinese imports of crude oil is a positive for the energy market. Having said that, I still think the major driver for oil at the moment is sort of the supply side concerns stemming from these conflicts we have going on around the globe at the moment. But nonetheless, yeah, a positive for the oil market looking ahead if this momentum from China can be maintained in coming months. I think that's the important caveat. But certainly, yeah, if we do see a continuation of these rising import numbers, rising demand from the Chinese consumer, that would certainly paint a rosy picture looking ahead for other markets, like you mentioned, such as, the steel, raw materials markets as well. So, yeah, we would just have to wait and see whether it's a one-off or that start of a trend, as I said. But certainly, yeah, very positive numbers in what we saw in the data today.
And we'll see what will happen in terms of the Chinese growth down the line. Tim Waterer, thank you very much for being with us today.
Thank you.